Good morning. Thank you for joining today's daily webinar. Today's topic is Roth Solo 401k providers. We're also going to go over your questions live on the stream here. So go ahead and shoot over any questions you might have. Today's daily webinar is for educational purposes. Looks like we've got a live question here. Let's take a look at it. I want to lend my solo 401k funds to real estate investors. Okay, that's certainly an allowed investment within the self-directed solo 401k plan. It's typically referred to as a promissory note, which can be secured or an unsecured promissory note. If it's a secured promissory note, it's oftentimes referred to as a trust deed investment, because the note is secured by real estate. We also have a really good note procedure, a robust note procedure, promissory note investment procedure on our website. Here it is right here. We have a dedicated video to the process. The rules and regulations are also covered there, both initial investment and going forward. It's got some good Q&As there, so take a look at that. Let me share that link with you here. With respect to the rest of your question there, any limits to this? No, there are no limits. You can certainly loan your funds as a promissory note investment from the solo 401k as often as you want. The only item that you want to be aware of are usury laws in that particular state. I know some states have what's referred to as usury laws or loan shark rules, which means you got to be careful with respect to the interest rate that it's charged. At the same time, you need to make sure that the interest rate benefits the solo 401k plan, because the purpose of investing in a solo 401k is to grow the retirement account. So those are some items to keep in mind. But yes, the regulations, the solo 401k regulations do allow for investing in promissory notes, whether secured or unsecured promissory notes. All right, go ahead and continue shooting over your questions live on the air here, and we'll go over those. As always, please also like our YouTube channel, subscribe to more videos like this. We also have a good community page on our website that you should take a look at. Consider joining, and you can ask questions there. It's free to join. All are welcome. It covers a lot of topics regarding solo 401ks, but also self-directed IRAs. And it's free to join. There are over 30,000 members there now, so take a look at that. You can also take a look at our solo401k.ai chatbot. It's the first and only type in the industry. You can get to it by clicking right there. Here it is. You can ask questions. Again, the domain for that is solo401k.ai. And you can get to that, to both the community and that AI by right there on our main navigation menu. Here's the link to the community, and here it is for the artificial intelligence. All right, so I'll monitor the live stream as questions come in, and we'll pause and answer those as they come in. In the meantime, let's get started with our topic for today, which again is Roth Solo 401k providers. So there are various types of solo 401k Roth providers, aka Roth Solo 401k providers. For instance, there are self-directed solo 401k Roth providers, which are typically trust companies where they hold on to your funds. So they'll charge you a fee to hold the funds, and you can invest in alternative investments like real estate. So they'll charge you a fee each time you process an investment in an alternative investment like a promissory note. And the trust company will actually hold on to that investment paperwork and charge you a holding fee. Likewise, if you send money out from that self-directed Roth Solo 401k held by the trust company, they're going to charge you a transaction fee. So the fees can add up pretty quickly. So typically trust companies are self-directed Roth Solo 401k providers. Then you also have brokerage firms who are Roth Solo 401k providers. Some brokerage firms that are Roth Solo 401k providers are Schwab, for instance, as well as E-Trade. I know that Fidelity is working and also offering Roth Solo 401k plans, but that has not quite been approved. So that's a second type of Roth Solo 401k provider, that is brokerage firms. A third type of Roth Solo 401k provider are banks as well as credit unions. For instance, Bank of America, Chase Bank, they may offer a Roth Solo 401k. Typically, when they offer that type of Roth Solo 401k, you're going to be restricted with respect to the types of investments. You'll typically only be able to invest in equities as well as CDs, for instance. Now, there's another type of Roth Solo 401k provider, which is a self-directed Roth Solo 401k provider with checkbook wire control. Those type of self-directed Roth Solo 401k providers are oftentimes referred to as truly self-directed Roth Solo 401k providers because you are in full control. Full control meaning that you can choose where to hold those Roth Solo 401k funds at. And the self-directed Roth Solo 401k provider with checkbook/wire control is the plan document provider. And a company such as my Solo 401k Financial is a company that offers that type of self-directed Solo 401k with checkbook control, wire control, resulting in you being able to use your local bank, credit union, or even a brokerage firm like Fidelity or Schwab to hold those Roth Solo 401k funds. And my Solo 401k Financial will assist you in opening those holding accounts at that applicable brokerage firm. So while that type of brokerage firm like Fidelity or Schwab may offer their own Roth Solo 401k, it's oftentimes limited in that you won't be able to borrow from that plan through a Solo 401k participant loan. You also cannot invest in alternative investments like real estate, precious metals, and private equity, for instance, or even promissory notes. What is more, it does not come with that $1,500 auto contribution credit, which is a way of the government subsidizing the self-employed to essentially promote opening a solo 401k to save for retirement. So the government essentially wants you to save for retirement because Social Security may run out by the time you reach retirement age. So as part of that auto contribution credit, only certain self-directed Roth Solo 401k providers, like my Solo 401k Financial, provide a robust plan that allows for that auto contribution credit, which is $1,500 spread out over a 3-year period in $500 increments. So for instance, if you open a Solo 401k, specifically a self-directed Solo 401k that has the Roth feature included with checkbook control or wire control for my Solo 401k Financial, the plan will be built to allow for that auto contribution credit, and you're not required to make contributions in order to qualify for that $1,500 auto contribution credit, which is spread out over 5 years in $500 increments. you would complete Form 8881 each year to get that $500 auto contribution credit. And not all self-directed solo 401k with checkbook or wire control provide such a robust plan. So those are the various type of Roth solo 401k providers. In review, you've got trust companies, you have brokerage firms, bank and credit unions, and then you have providers such as my solo 401k financial who offer that fully, truly self-directed Roth solo 401k with check with wire control. Okay, let's take a look at some more questions here. And we'll come back here. As always, please go ahead and like this video, subscribe to our YouTube channel so you are notified each time we have a daily webinar and cover these types of good topics. All right, let's see. We've got another question here. Hi, I understand. I have to let you know when the 401k balance gets above 250,000 so it can be reported to IRS. Is this combined value of all of our accounts? Great question. So let's take a look at some information. You are referring to the annual Form 5500 Easy Tax Return that applies to a solo 401k plan under certain circumstances. The first one is once the market value of that solo 401k plan is greater than $250,000, that's going to trigger the requirement to file an annual Form 5500 Easy. And that Form 5500 Easy is due by July 31st of the following year if your plan year end is December 31st. And that's a service that we provide to our clients at no additional cost, provided that they timely request that Form 5500 Easy preparation, because we don't have access to your funds. Now, with respect to the rest of your question there, yes, you have to aggregate the value of all of the holding accounts within the plan, as well as all of the participants' funds in the plan. More specifically, let's say your plan holds Roth funds, pre-tax funds, and voluntary after-tax funds. Well, it's considered one plan, so you have to aggregate all the funds and all of those holding accounts. What is more, if you also have an additional participant in the plan, many of our clients have a spouse who also participates in the same solo 401k plan because they are self-employed in the same business. Therefore, the plan is sponsored by that self-employed business. As a result, you have to aggregate both participants' funds in the plan, and if when aggregated together, it exceeds that threshold, meaning it's greater than $250,000 in value, then you have to file that Form 5500 Easy. Another item that will trigger that Form 5500 Easy is you have to aggregate your defined benefit funds as well. Let's say that in addition to contributing to your solo 401k plan, you also sponsor a defined benefit plan through your self-employed business. Therefore, you have two plans. As a result, you have to aggregate both plans' balances, and if when combined, the fair market value is greater than $250,000 in value, you're going to have to file two Form 5500 Easies, one for that defined benefit plan and a second one for that solo 401k plan. The last instance when that Form 5500 Easy applies is when the plan is terminated, when it's closed. And that Form 5500 Easy applies regardless of market value. So even if the solo 401k market value is less than 250,000 when you close the plan, you're going to have to file a final Form 5500 Easy to formally close the plan with the government. So great question. So make sure to understand those Form 5500 Easy regulations. We actually have some great resources on our website that cover the Form 5500 easy filing requirements. I'm going to share, here's a link to our Form 5500 easy FAQ page. Okay, let's take a look at some more questions here. Okay, let's see here. Looks like we have a follow-up question. That's exactly right. You have to combine all of the funds in the plan, both spouses funds in that same solo 401k plan. So if the value of all of your funds in that plan, yours and your spouse's funds are in aggregate exceed that $250,000 market value threshold, then a Form 5500 easy must be filed with the government. Okay, we have another question here. If I have Roth and pre-tax non-prototype accounts with Fidelity and contribute late, no tax extension, what happens? If I have Roth and pre-tax, well, that means that that contribution was not allowed. So you have until your business tax return due date plus timely filed extension to make those contributions. So you're going to have, one option is consider going back and amending that tax return so that you qualify to make that contribution. If you did not qualify, then consider applying it for tax year 2025, as long as you're going to have the net self-employment income to support that contribution for 2025. Otherwise, if you do not plan to contribute for 2025, you're going to have to remove it from the plan as an excess contribution. All right, let's see, we've got another question here. I calculated my required minimum distribution to pay it before December 31st and just sent in to generate distribution form for 1099-R for tax year 2025. RMD funds used were based on December 31st, 2024 year-end value. I set the distribution date December 30th as a request distribution date. I plan to distribute before that date anyway. The automatic response was the Form 1099 will be issued to the IRS in 2026. I'm confused. From my understanding, the 1099 will be sent to the IRS this year and copied to me before. No, that's incorrect. Your understanding is incorrect, but it's a great question. Anytime you make a distribution from a solo 401k plan, the distribution is reported as of that year. So for instance, if you processed a distribution here in 2025, that's going to be a 2025 distribution. Therefore, the Form 1099-R does not get issued till early in 2026, generally January, February of 2026. So distributions are reported in the year that they're distributed, or I should say they count for the year in which they're distributed, but the Form 1099-R for that year is always issued by January, February the following year. So again, if you distribute funds from the plan here in 2025, regardless if it's a required minimum distribution or a normal distribution, it is applicable for tax year 2025, which means that it's taxable for tax year 2025. What is more, you're going to have to pay the taxes due on that conversion, on that distribution for tax year 2025. You can pay those now, or you can pay those taxes when you file your Form 1040 for tax year 2025 by April 15 of 2026. All right, great question. Let's take a look at some more questions here, if there are any more. All right, looks like we have a follow-up question. Okay, perfect. Can you expound on the 50,000 personal loan also? Can I take 50,000 from my Roth and 50,000 from my traditional? Can I take 50,000 and my wife take 50,000 from her solo 401k as well? Good question. So Each participant can borrow from their solo 401k plan. That's known as a solo 401k participant loan. Let me go to that page that talks more about the solo 401k participant loan regulations. Here's a good page on our website where we outline from A through Z the solo 401k participant loan regulations. We also have a great video there. To finish answering your question, it's $50,000 per participant in the plan. It's not per holding account. So you can borrow a total of $50,000 from your solo 401k funds, and your spouse can also borrow $50,000 from her solo 401k funds. Now, it's important to clarify that you can borrow 50% of each participant's aggregated funds, not to exceed $50,000. Therefore, in order for each participant to borrow the full $50,000, each participant is going to need a minimum of $100,000 value in their respective solo 401k funds. Also, when you process the solo 401k loan, you can choose to borrow from the pre-tax funds or the Roth solo 401k funds. But no, you cannot borrow 50,000 from each of your holding accounts. However, each participant, in this case, each spouse can borrow a total of 50% of their respective balances in the plan up to 50,000. So I already gave that example of 100,000. Let's say each participant only has $50,000 in their respective funds in the solo 401k plan. Well, therefore, each participant would only be able to borrow $25,000 because 50% of 50,000 is $25,000. Good question. Okay, let's see here. So again, today's topic is Roth solo 401k providers. We went over that in great detail. Again, please subscribe to our YouTube channel, share it with others to help get the word out to other solopreneurs like yourself. Looks like we have another follow-up question here. That 50,000 loan should go up each year with inflation. Yeah, unfortunately, that's not how it works, but I certainly understand what you're saying. There's also the possibility of deflation. So, and also they're talking about possible stagflation. So we'll see what happens here in the next few years. And of course, it was just released yesterday that the tariffs have been put to a halt due to the federal court blocking them. Of course, the administration has appealed it, but we'll find out. So there's a lot of interesting things happening right now from an economic front. But yeah, I mean, just like inflation is possible, there's also deflation and worst of all, stagflation. But not to get off topic here. But I mean, in conclusion, that $50,000 maximum loan, participant loan, that's always been the limit since 401k plans have been in existence. So it's never been less or more than that. So I don't foresee Congress ever adjusting it, whether it's deflation, inflation, or stagflation. All right, looks like we have another question here. How do I how do I account or tax professional that is familiar with this type of checkbook? I've spoken with some who are familiar with solo Ks generally, but this type of specific, any tips? Well, here at my solo 401k financial, we are well versed on those regulations. So feel free to continue asking questions. Email us. We're experts at self-directed solo 401k and even self-directed IRAs. But with respect to a tax professional, you are right. Most tax professionals are not well versed on the regulations for solo 401k plans. Here at my solo 401k financial, we've been at this since 2009 I myself have been in the I've been in the industry since 1996, so we're well seasoned here, and we do have some CPAs listed on our community who are well seasoned when it comes to self-directed solo 401k plans. That's why it would probably be a good idea if you go ahead and join our community if you have not already. Here's our community. You can actually do a search here for other members. If I do a search here, I'm going to type in CPA. Let's see what comes up here. Give me a moment here. So there's a lot of good blog posts out there that CPAs have posted there regarding solo 401k plans. So there are ample. Here's one here. I mean, there are many CPAs. So our community has over 30,000 members. So here's another one here, Amanda Hahn. She's actually well known in the industry. She's well, I mean, again, I can't stress enough. Join our community. You can ask questions. You can search for professionals out there who are well versed on not only solo 401ks, self-directed IRAs, but also estate planning, tax planning, wills, living trusts, entity formations. Here's our forums. You can also post forums. A lot of these professionals have posted blogs there. I mean, I can't stress enough. I mean, you gotta become a member, and it's free to join. All right, so let's take a look at see if we have any other questions here. Again, thanks for joining today's daily webinar and asking your great questions. Looks like we have another question here to my previous question. Is it okay that you will send my RMD 1099-Rs to the IRS in 2026 for my payment in 2025? Yes. Again, the Form 1099-R does not get issued till 2026 because you process the distribution in 2025. That applies for any solo 401k or, for that matter, any IRA. Those are statutory regulations. That Form 1099-R does not get issued until then. There's no possibility to issue it now. The IRS has not provided that Form 1099-R yet for use for issuing it. So again, you will not get that 1099-R till next year. All right, let's see here. And again, those are statutory regulations. If you need more clarification on that, feel free to send us an email to business@mysolo401k.net, and we'll gladly help you beat that horse to death. All right, let's see here. It looks like we don't have any more questions for today. Again, thank you for joining today's daily webinar. We're live every day at 10 a.m. Pacific time. So feel free to join tomorrow, and we'll go over another topic, and we'll continue to answer your questions. Until then, have a great rest of the day.